Good afternoon. This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. I'm your host, Christine Lee, taking a look at our top stories. China's Qinghai province announcing a new ban on virtual currency mining operations, citing concerns over energy consumption and financial stability, a government document reveals. Qinghai is the latest coal-based crypto mining hub that is set to be completely eliminated from the industry following another crackdown notice against crypto miners in Xinjiang and Inner Mongolia, which had previously imposed restrictions on miners. And take a look at this. This is what CoinDesk sees when attempting to search for crypto exchanges Binance, Huobi, and OKX, both in English and Chinese, on internet search engines in China. It says, according to the relevant laws, regulations, and policies, the search results have not been displayed. And it appears major internet services in China, including Baidu, Weibo, Zhihu, and Sogo, are censoring keywords associated with crypto exchanges. And finally, Chinese police arresting over 1,000 people on crypto-related money laundering charges. This is the fifth round of a nationwide crackdown on money laundering activities related to telecom fraud in China, dubbed Operation Card Breaking. So checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at 36,000 and change. Bitcoin is up about 10%, as we did learn earlier this morning that El Salvador is accepting Bitcoin as legal tender. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, the Bitcoin network's hash rate, that is the global computing power that is being used to process transactions on Bitcoin's proof-of-work blockchain, is plunging to its lowest level since November, according to Mining Pool Stats data. The blue line that we see there represents known mining pools, and the purple represents the network's overall hash rate. By comparison, you may recall earlier this year in April, circled there in red, when Bitcoin's hash rate fell over 16% due to coal plant accidents that caused power outages, shutting down several Chinese Bitcoin miners. Well, right now we are witnessing an even greater fall in Bitcoin's hash rate as China cracks the whip on mining operations within the country. And joining us now to discuss from Austin, Texas, is Darin Feinstein, founder and executive chair of Blockcap, one of the largest miners in North America, and a member of the Bitcoin Mining Council led by MicroStrategy CEO Michael Saylor. Welcome to the show, Darin.
Thank you for having me. It's a pleasure to be here.
Good to have you. All right, so some troubling news out of China. Is it concerning to you to see Bitcoin's hash rate tumble like this?
I think we've seen this before in a number of different instances, and as you see the fluctuations geopolitically in different geographic regions, we start to see the hash rate change depending on what the government does at any specific time. And so what we're seeing happen in China right now, originally about a week ago, seemed very similar to what happened in 2017 when the Chinese government similarly banned exchanges and put some pressure on some of the miners that were in the coal-dominated regions, which are up north. And as a result of what happened in 17, we saw some of the exchanges cross borders, but the miners didn't really have much effect. And so when this initially was announced, we thought there would be a similar reaction. However, as you're starting to see in the hash rate, this does seem like it's different than what happened in 2017. And so we're seeing, I think today we're down to 138. I'm looking at the chart right now on where the hash rate is. We're looking at block times at about 11 minutes, and the network likes to be at about 10 minutes. So we will see a downward adjustment if this holds up in the next difficulty adjustment. I think you would also see in the last iteration of the difficulty adjustment, which happened about last week, there was a 30% difficulty decrease. So the block time decreased by about 30%, which allowed the people that were on the network to mine more Bitcoin. And we're going to see something similar happen again this time if this 11-minute block time holds up.
So does that mean we're going to see the network go a little slower coming forth, the mining difficulty adjust, as well as does that have any impact on the rewards that miners receive?
Yeah, so the miners receive rewards and transaction fees. And so you'll start to see the rewards at right now today, they're at 11 minutes. However, it's interesting to note that about a week ago when we had a 30% difficulty adjustment down, which means there was less hash power, the network picked up a lot of steam over the last 10 days up until today, where if you look at what the estimated difficulty adjustment is for the next period, it's actually plus 18% more difficult. So the network has been processing more blocks than would require a downward adjustment. So even though right now we're seeing an 11-minute time between blocks, the estimated difficulty for the next readjustment, which is in 3 days, that still shows plus 18% more difficult, because you're going to have to weigh in today's metrics that, the last recent decrease in hash power with what's happened over the last 10 days. They average it out.
So Darin, billionaire investor Ray Dalio, who is a Bitcoin holder, says that the risk to Bitcoin will be if governments ban it. We see that happening in China to a degree right now. How do you think this will play out?
Well, the risk to Bitcoin in a geographic region is if their governments chill the technology. Fortunately for Bitcoin, it exists in a geographic agnostic manner where it's distributed immutably across the world. And so the 60,000 nodes and the millions of ASICs that are running the network, if the Chinese government outright bans it, which has happened quite a few times in different regions, the Bitcoin network doesn't care. So it'll continue to exist and move on and prosper in regions that accept the ability of their citizens to have financial uncensored transactions.
Well, some people say this might actually be a good thing. China accounts for about 2/3 of Bitcoin's global hash rate, so this might dilute that centralization a bit. Do you agree?
I agree. I think distributing the technology and the mining around the world is something that's positive for the network, and we'll also see the hash power go to regions that are embracing the technology, such as what happened in El Salvador, as the announcement yesterday, and their announcement today that they're going to look to geothermal renewable energy to power some Bitcoin mining machines, which will be a really good boost to the renewable energy story that it really does exist on the Bitcoin network.
And despite restrictions in the past, China's crypto industry has thrived. But is this a sign things will be different, that the hammer will come down stronger or more swiftly in China?
I mean, anybody can surmise what the Chinese government is going to do. I think only they know. But in the past, historically, the more that governments ban Bitcoin or Bitcoin network or Bitcoin technology within their borders, they see a spike in its usage. So you see governments around the world ban Bitcoin, and then a few years later, they have to ban it again. And so if it really worked to ban the technology within their borders, they would only have to ban it one time.
Do you see Chinese miners trying to sell off equipment to foreign mining facilities? Or what do you think they're doing now that they're shutting their operations down? Are they just trying to find another place in China to relocate, or are they trying to just get out?
I think it's nuanced. I think where you see the fossil fuel power plants in the coal regions, they will have some, it sounds like they're shutting down right now if you look at the hash power that exists on the network. But there are several regions in China that use predominantly renewable energies, mostly from hydroelectric plants in the Sichuan region. And over there, you're going to see less, and I imagine less of a desire for the local officials to outright ban the mining that goes on there, because it's a very profitable industry for them. But again, we'll only know when we see what happens over time. And it'll be interesting for certain.
What does this mean for the rest of the world in terms of North American mining operations and European mining operations? Does this have an impact at all?
Yeah, so you have two effects. You have one, which you asked about, which is a good question, the existing equipment that's inside China, and it will be difficult to move it if it's old generation equipment. If it's new generation equipment and they have been shut down, I think they will move it. And then you have the question of the new generation equipment that's being built and distributed by manufacturers every month coming up into the future. And if I was to guess on what investors into the space are looking for, they're looking for geographic stability. And if there's a feeling that China is going to cause the miners and the facilities that exist within China to have uncertainty about the mining, then the machines that may have been purchased to go to China would look to other homes. And so those homes would be in North America, most likely, because of the growth of the infrastructure in North America. You also see a big growth in Canada and other really progressive countries in the world that are looking to provide financial freedom to their citizens.
All right, Darin. So in conclusion, it doesn't look too great, but it looks like the network is holding up. Thanks for joining us this afternoon.
All right, pleasure.
Right, that was Blockcap founder and executive chair Darin Feinstein. Coming up, El Salvador makes Bitcoin legal tender in a landslide vote. Welcome back. El Salvador officially recognizing Bitcoin as a legal tender. In an early Wednesday vote, a supermajority of the nation's legislature voted in favor of President Nayib Bukele's proposal for the Latin American nation to adopt Bitcoin. The president intends to sign the bill into law today, Bitcoin's price jumping the most in 2 weeks amid the news. And joining us now to discuss is CoinDesk Director of Data and Indexes, Galen Moore in Boston. Hello there, Galen.
Hi, Christine. How are you?
Very good. Always good to see you. All right. So can we attribute this bounce we're seeing in Bitcoin to this big news out of El Salvador?
I don't think so. I mean, look, the El Salvador news is great. I think everybody's really excited to see a country embrace cryptocurrency, make it legal tender in this way. But, you know, I would look, and as your last guest, Darin from Blockcap was saying, what countries do at the margins, the on-ramps and off-ramps to Bitcoin do have impact on the price. But I think in terms of global impact, something like Canada approving a Bitcoin ETF, that's a greater impact, right? And I should mention that the ETF provider Purpose Investments is a CoinDesk Indexes client. That kind of step that other larger countries will follow is the kind of thing I think that will move the needle for Bitcoin. El Salvador, probably something to celebrate, but unlikely to really move the needle.
I'll say that, but we did see a bit of a boost since the president, Bukele, made the announcement over the weekend. We did see the markets actually pull back a bit. It seems though it's taken a while for the markets to react to this news. And we were saying earlier this morning that often the price reacts to meme stock, to memes, to tweets. And so why wouldn't a substantial policy change of a nation move the dial forward a little more? But, we are seeing a slight bounce. Galen, you'll have to give us that.
That's true. Although, I think some of that may come from a kind of people realizing that the FBI cannot snatch their Bitcoin funds willy-nilly, for example. That seemed to be a little bit of a narrative developing earlier in the week where it turns out actually what probably happened was we had some cyber criminals who were not keeping their OPSEC in the way that they should have been. We've got the victims on Capitol Hill getting a drubbing over that today, and apparently that was the same case with the people on the other side of the thing.
And of course, we're getting this news out of China, which is, of course, not good for the mining industry, at least in China. Perhaps it could be an opportunity for other miners around the world. We'll wait and see how this plays out. But you also have a chart for us, the top 25 countries with realized Bitcoin gains. Maybe we can get that one up there for us. And we see that the United States,
Yeah, we spotted this out of Chainalysis the other day, and I have to say I was impressed with the methodology they used. It's difficult to parse where Bitcoin is going or coming from, and even more difficult to parse kind of when it was bought or, you know, what exactly the realized gains might be. I would just like add a caveat that these are these are not dollar on dollar gains, right? This is reflecting funds flowing into and out of exchanges. And then the sort of the geo weighting is done by web traffic to those exchanges. So, you know, a good method and an impressive kind of gap here between the gains for U.S. investors and others.
Yeah, what's that all about?
As a kind of a, well, look, I mean, I think just like just like your previous guest was saying, like Darin was saying, there's a significant investment happening in cryptocurrency now in the United States and in North America. You're seeing larger pools of capital start to pull in. And that's reflected in the growth of the mining industry here, which is a very capital-intensive business. And I think it's reflected in the numbers that you see here. U.S. investors have participated in this run-up, which for Bitcoin began in Q4 of 2020. The year-to-date numbers don't necessarily reflect kind of what Bitcoin has done over the past 9 months.
Yeah, and this is for exchange flows. It's not a representation of whether it's institutional or retail.
That's exactly right. We don't know really, is it an institution benefiting or, you know, what trades they might have made along the way. Again, not dollar for dollar returns, which is the only measure, right?
Still, it's a landslide for the United States, 4 billion versus 1 billion for China.
With a gap like that, and I think, you know, looking at their report, a solid methodology, you have to look and say, okay, there's something happening here.
Excellent. Thank you so much, Galen, for joining us.
Thanks, Christine.
Right, that was CoinDesk Director of Data and Indexes, Galen Moore. And that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.